All right, there we go. Going live now. Howdy, everyone. This is Tyler Coates along with Fibbo Swanee, and we are the two of the three honest analysts. Joe is going to be going live now. Oh, geez, yep, that's me. All right.
There's a higher power speaking.
I'll tell you what. So yeah, Joe will be joining us here in a little bit. He said he's running a little late, and Fibbo said that he's got plenty to talk about before then. And then, as usual, I'll have my stuff to chime in there towards the end. So definitely going to be interested to dive right into some charts, and appreciate everybody for tuning in and already giving us a bunch of thumbs ups. That's always nice to see a bunch of thumbs ups before we even get started. So appreciate you all. And Fibbo, that is a one sweet hoodie. Where do I get me one?
I'll get you one. Don't worry about it.
All right.
I'll get you one. Yeah, this is my sister got me this because she knows I'm all psychedelic and all crazy. So yeah, it's a nice little hoodie. I can't put the hood on because I mean, I guess I could, but
yeah, you need to. I mean, you kidding me? But
all right, I'll put the hoodie on. What the hell?
Yeah, I mean, you need to get used to this. I mean, I can see how comfortable you look, and I can tell how good you look too. I don't know what you've been doing with your life.
Oh shoot, dude. Oh man, no, I'm just chilling. I'm just I mean, I was talking to you earlier. I've been kind of busy at work, just doing a lot with I deal with a trading desk in Budapest for work, and they deal with a lot of energy all over Europe. So I've been on this on this project, just kind of working with them to just to help out with entry and exit points on 75 different commodities. It's been pretty interesting. I love my day job. I wouldn't give it up. I'm a technical analyst for a living. So I love it, and I've been doing that for 16 years with this company, and I wouldn't want to go anywhere. And on the side, I'm helping you guys with Bitcoin.
Yeah,
and enjoying the show on Thursday nights. This is fun.
Absolutely, a lot of fun, and some great work that you're doing. Absolutely, so I'm glad to hear that that's been keeping you busy. And yeah, it's very interesting. It makes me wonder what somebody needing to hedge against 60 different commodities. What in the world is this company doing? Like, what? I mean, that sounds like it must be.
Oh no, we're a consulting firm. It's clients, yeah.
What you're consulting for sounds like it must be a massive.
Yeah. All bunch of Fortune 500 companies all over the world have to buy energy, so we help them hedge their energy costs because they have to burn some type of energy to make whatever widget or whatever they do. I'm there to help the risk managers and us, come up with a forecast opinion and help them mitigate risk. That's my job, which is awesome.
Yeah, that's really
one of the best jobs in the world.
It is absolutely, and it makes me wonder: have any of your clients been Bitcoin miners? Have you gotten to do anything along those lines?
No, nothing on that end yet. We have a clean tech division, clean technology. I'm sure they're dealing with all of that. I'm not in that because there's no way to do technicals on wind futures. If there was, I'd help out, but I'm purely technical. I do all my stuff, technical analysis and all that. Models.
So I'm just curious, like if I was a Bitcoin miner and I was producing Bitcoin and I was making a lot of money with my operation and I was just concerned about the volatility, I'd be wanting to hedge my, exposure with futures, and like I'd be wanting to talk to a guy like you who does this already for major Fortune 500 companies. It seems like you could be in a really good position to maybe, get some big mining companies on board. I don't know. I'm just kind of thinking out loud.
No. I'm sure that that division is probably working with a lot of those companies, because I think one thing that's cool about clean energy and mining, because I think a lot of the Bitcoin mining is going to go the clean energy route, because they could put a warehouse anywhere, put it somewhere where you get a lot of solar and just run the whole thing off of complete solar. And you don't, and you could be away from, you know, you can put it anywhere. It isn't like you have to attach yourself to a grid or anything like that. You can use that kind of technology to mine wherever you want all over the world, which I think is a pretty badass.
I think
about.
it's really badass. Absolutely. So I guess last thing to wrap it up, I'm sure a lot of people listening are interested and in that, and it sounds like a pretty unique job. Like if you were to tell somebody, somebody like your son comes and asks you that they want to get into doing what you're doing, what advice would you give them to get into a position where they're able to do TA for a living outside of just trading their own capital?
That's a good question, and I don't know the right answer to that because I don't know how. I kind of got lucky. I'm a finance major in college, so I grew up outside of Chicago, in Indiana, and I always looked at the pits there in Chicago, the Board of Trade and the Mercantile Exchange growing up, and I always thought that was the coolest thing, and I always wanted to trade commodities, and so I kind of went that route. So I got a finance degree, and actually I found a job down here in Kentucky where where a cattle broker needed someone to trade cattle futures and grain futures, and I luckily landed that job, and somebody took me under their wing to help me out there. But during that time, it's really sink or swim. You just dive in and learn as much as you possibly can. Uh, Later on, I took the exams to get certified, so that kind of helped. So you learn a little bit that way. But the more you just do and learn and keep just experience. I mean, it's weird, but you can read all the books in the world, but until you actually start going and physically getting in there and doing it, that's where you really learn. And sometimes you got to get smacked in the head and knocked down a few times, but you got to learn from those mistakes. Like, okay, what happened? How can I fix that? Adapt to it, those kind of things. So I don't know. I don't really have the right answer for that, but
I think that you gave the perfect answer, actually, and I was glad to hear, because everybody that I ask ever that's in that's successful and in some sort of unique situation has a very, very, very similar story. How it's kind of a lot of luck involved, but that the luck followed a lot of hard work and dedication, and it's something that the Kybalion talks about. Book I'd recommend anybody interested. The Kybalion by 3 Initiates. It talks about how wherever there's a student, there will be a teacher. And if you are somebody who has a deep desire in your heart to do something, and you just do whatever you can, all the universe asks is for you to do your best, do the best that you can. And it's never going to be perfect. And as long as you're willing to, pull yourself up by the bootstraps and go chase your dream, then and try as hard as you can, there's going to be some sort of lucky door that opens, or some sort of teacher that comes along and offers you that bridge to kind of get where you want. And I think that that's a very, very, very important concept to believe in, is that that the universe responds to effort, and it may not always lead you to exactly where you were planning on going, but as long as you have a clear vision and a mission, and you refuse to give up, and your morals are sound, weird things just happen along the way, and things just really happen to work out one way or another. So I was glad to hear you give that response, because I think that that's a very common story for anybody that's actually done something fairly unique or special with their lives, and you certainly meet that.
No, I mean, I think what it is like when I first got that job, and the guy just basically took me under his wing for a year, and then he actually moved on to another company, and then his job split into two, and I took the trading side, which was really awesome. It was sink or swim, but I mean, I had to figure it out. But two things: I've always had a passion for it, and I still have a passion today. I've been in it for years, and I still love it. So I think anything that you have a passion in, you just dive into. But then also, when I jumped in and someone helped me, that's why I always feel like I want to take what I know and try to help others. And that's what I've always been trying to do. especially in this Bitcoin space, because this isn't my full-time job. This is my, my moonlighting that I help on the side. And so I just want to kind of take some of the knowledge that I've learned over the years and try to help others with it. And hopefully they take it and adapt it to whatever they're doing, and then take it and show someone else later on, that, and just kind of keep going that way. So I mean, that's just the way I kind of think, I guess. So.
This is the way of the world. That you have to be an apprentice at first. And the other thing he said that's extremely important is the difference between studying and actually doing. And he said something like, you got to get hit in the head a few times. And I think you got to get hit in the head every single way possible. Every single way that you can get burnt by the stove, you have to have that happen before you're ever going to be able to start implementing some of the things that are easier said than done. So very, very important.
And everyone will. I mean, no matter who you are, you're going to get smacked.
You're going to get
many times.
And you just have to be willing to take those knocks, because anything that's worth doing ain't going to be easy. And that's the bottom line. So I appreciate you sharing a little bit about your experience. I think that's a good thing for people to kind of pick up on, because I know the energy that comes from a Bitcoin bull market, it's freaking inspiring. And you feel it in the bottom of your heart that you want to, really do something and really, maybe make a difference or get out there and maybe make a change in your life, because now you're seeing some of your dreams come true, or whatever the case may be. So I think that anybody out there who is feeling a passion and a pull in their heart, it's very important to pay attention to that, but you have to do it in a smart way. You have to, you can't just willy-nilly pipe dream, go something like that, diving in the deep end without knowing how to swim. But if you have a very clear mission and you feel that passion and you're willing to put in the effort that it takes, and you understand that that effort is going to be nothing but getting kicked in the head 1,000 different times until you can learn how to block that kick, and then all of a sudden you'll start to see a counter. And that is something that I will stand by my whole life, is that you have to follow your passions, but you got to do it in a smart way. So something I always recommend, and love talking to people like yourself who have done that, and it just always seems to work out one way or another. And that's my opinion.
Yeah, no, it's awesome. That's awesome. All right. You want to talk charts?
I'll go ahead and get you the screen share privilege.
Right. I didn't even have to ask this time. That was nice.
I'll tell you what.
I'm moving up in the world. Let's see here.
Yeah, once you share enough good charts, you don't even have to say please anymore.
All right, I got a bunch of them here. I'm just going to kind of go through each one and kind of show you what I'm looking at. I'm going to start on the hourly. The other, what was this? The February 2nd, we had a threshold move right here that moved into the bull zone. The ADX was increasing on an hour-over-hour basis for the bulls. So the positive actually changed right about here, and that's where the fib actually starts at. I get a lot of questions like that of why you start your fib there. It's once the threshold is established, I look at when the ADX actually changed period over period, and that helps me establish where I feel like the psychology actually changes in the market at that point in time. And that's where I want to measure the Fibonacci ratios and get that proportion in the market. So that's where I start there. And then right now, taking this low up to the high we've had, the 38.2% level has been right there at 36.7. And it actually dipped down there a little while ago, wicked down, but came right back up and actually closed above it. So as I always talk about filtering three periods, it did not close 3 hours in a row underneath this line. So it kept that support going pretty well, popped back up. So what I did was I just put a fib off just this leg just to see where the 61.8% level is. And it matches up really nicely with the shallow fib from before. And it also matches up nicely with the 55 exponential moving average right there, which actually came down, didn't touch it, but it got pretty close. And then we kind of bounced off of that a little bit. the one thing that we were watching was as this came down and tried to break this 38.2% level, it just touched, or actually it was just above the fib range that I've had, that I use from the historical, looking back. So it held the bull zone. So right in this point was, if you haven't bought yet, that was probably a spot to maybe go long. Pretty risky up in this area because this is where you should be going long on the original hour. I don't do a lot of trading off the hour, but I do it mainly off the 4 hour. But if you're looking at it from the way I approach things, this is where you would have been getting in the market right about here, and then riding it up to the upside. Two things that I have on here also that is kind of interesting is a couple of things I like to do is I like to go back, like when the market was in this zone back here, and then it popped up above this 100% and it made a new high above here, and then all of a sudden that became support going forward. I like to look at what the fib extension is off of that. So what I do is I take, since it made a new high above this level, I take the high here down to the low. It did touch there and then come back down, but then it finally broke. But one of the areas that I look at is that first fib extension, just for where I think let me turn this magnet off. That's so annoying when I leave that on there. This zone between the 127 and 141. So if you extend this through like that, you can see it pops up, hits that level, comes down, comes through, hits the top of this, and then comes back down and touches. So right in here, this, and then it pops up, and then it comes back down, and you get basically the 141 was resistance, came down, and then this turned into support, and then it pops up, and then all of a sudden the 141 becomes support. And then what happens is a high probability of going from the 141 up to the 200%, which I don't have the 200 on here. Let me put it on here real quick. So the target would have been 37.4 off of this. It went up to the, and I'll talk about this one in a minute. Went up to this one, came back down, tested it again as support, and then it came back up, and then it tested this realm, which I'll talk about in a second, and then it went off, and then we made that target to 200%. So when I like looking at these when the market's in a nice run to the upside, I'd like to look at this as some support and resistance levels to watch to see if it's going to hold or break or not. And also, I'm also taking the fibs along with it. The 38.2% levels right there on that one. You keep moving it up, The 38.2% levels right there, so it matches nicely. And then right now we're all the way up to this point, where we're sitting right at that point at the moment. Another thing is I'm just taking different corrections. There was this correction, and then since it didn't make a new high, there was this correction. So you can take fibs off of this direction, off of this new high, and do the same thing. Kind of, if you move this down into this zone, it also matched up pretty nicely on here, and then it went up to the 200% right here, and then so on. So just a way that I like to look at, just using fib extensions off of new highs. Now, once we break this high, which we haven't yet because it just touched the target, because that was the main target was 38.6. Off of this 38.6 right here is one I was looking at that was pretty close to this high, which I actually sold, and then I bought back down in here. So I'm still back long again, but I did it off the 4 hour, but you can see it on the hourly too. But so once this makes a new high, I'll do that same deal just to kind of keep an eye on it, like this. So once it makes 100% and gets above it, and if it closes three hours above this level and there's momentum behind it, then the 40.4 to 41.3 zone comes into play for me. But right now we've hit the top and then we're consolidating. But so far the shallow fib and the 61.8% and the moving average is all kind of holding this in consolidation at the moment, to see if this thing will hold or not. And so far it closed and kind of got a little bit of buying interest off of this. So that's a good sign so far. And we're staying in the bull zone. So So hopefully I'm explaining this hourly pretty well. When you go into the next time frame, which is the 4 hour, we've been in the bull zone on this one since this point in here, um, when the threshold went into this point, and then we got that huge day when Elon, kind of pushed the candle probably a little further than expected, but it went up to that point. But the interesting thing here on watching this bull zone on the 4 hour was I bought in here on this move, and I got in at an average about 34,800 because I got in on this move, or actually no, it wasn't on the move to the upside, it was on the downside. Now that I remember, when it was coming back down on this red candle, I bought in here because it hit the 61.8% level, and we were still in the bull zone and everything looked pretty decent. So I went ahead and bought, and then the next couple of days, or over the next 10 hours or so, or actually it's probably a couple of days, we went into this consolidation zone, and we went all the way down to the original point where it almost touched a full retracement. But I didn't sell out. I held my long in here and kind of went negative for a couple of days, hoping this would hold. But one thing that I was watching as this price was in this consolidation and it worked its way down here, the ADX just kept dropping and dropping and dropping the entire time. So as the price was consolidating and dropping here, there was absolutely no momentum, and the RSI stayed inside the bull zone, inside this green zone here. I got this little blue in here is just to show where the consolidation was happening, and then it kicked back above out of consolidation, and then it started getting this leg going up to the upside. So watching my fib zones, or the bull zone here kept me in my long, as long as it was staying in this consolidation. Now, if it would have broken out to the downside, I would have gotten out and I would have taken the loss. But that's the whole key about a lot of swing trading is you get out early on your losses, but you want to kind of continue on your trends. So when you get the larger moves is where you make your big bucks, and then take your chances on these little things to see if the fib levels are going to hold or not. And in this case, it did, and I held, and then actually sold out at 38.6 when it actually went up to the high, and actually I bought back at I think it was 30. I can't remember where it was, but it was pretty close to where the shallow fib is, and so I'm back long again on this going forward. So the nice thing is the way I follow this is it kept me in my position probably longer than what other people might kind of look at. They might be in here and go, "Oh my gosh, it's going down! I'm getting the hell out." So sometimes it's it gets emotional. Like I'm in the negative. What should I do? I said I just got to stick to my plan. Sometimes it works, sometimes it doesn't, and in this case it did, and it kept in there pretty good, and then it's launched up. So now the 38.2% level is at 36.1. The moving average is right there, and we're finding some buying interest at this level, and we're still in the bull zone. The momentum is still with the bulls, internally. So as this market moves down to this level, buying interest should still kind of be found. So I'm kind of leaning and staying toward the bullish side. So I'm still cautiously optimistic that we could kind of push up and make new highs and get above this 38.7 and get up to probably around 42 or that previous high, or basically the all-time high so far, where that is the all-time high, right? Yeah, 42. So I think it's going to be 42 before 32 is what I'm kind of been telling people. I think it'll hit 42 before it would drop all the way to 32 at this point in time. Now, of course, things can change, but with what I'm following, it's all working out so far. The pattern's holding the way it should. Same kind of thing. I took haven't made a new high yet, but if we get 3-4 hour closes above 37.8, then the 40 to 41.6 comes into play on this extension off of this. And then if it gets all the way up to this point, then I'll take this one at this point if it gets above it, and then all of a sudden 43.2 to 44.8 would come into play if it breaks above that level and gets filtered out. But right now I'm just kind of waiting to see what's going to happen there. The other side was going the other direction, going this way. The 127 to 141 was a fib reversal zone right here, and the market came down and just touched right there, and then popped up at that point, and that's where we're at the moment. So that's what's happening on the 4 hour. Going, the other ones aren't going to be in depth as much. Oh, this is the pattern that I've been following on the 4 hour. I talked about this last week. When this started to come down inside this falling wedge that I was looking at, and it failed right here. To me, that was a nice bullish signal, and it goes along with what was happening in here, where with the momentum dropping like it was. It didn't have a lot of momentum for the bears to push all the way to this point. So that to me was a slightly bullish signal. We got up there, popped it up, and then we came back down. We broke the trend line, and then we came back down on a throwback to the trend line right here. So what I did was I just took the fib off this level right here, and it matches up really nicely with the 61.8% level. So as it kind of tested in here, it held right at this intersection and then off to the races, which is just super nice. I like the way that looked. We have hit the previous high right here, so which makes sense. And then we're starting to come back down. But right now, I like the just this leg right here shows a 38.2% level that's holding at the moment. And then if it does fall from there, the 38.2 at 35,100 to 35.3 for the 61.8% level. Both of that should be finding some buying interest if it drops out of bed, or not out of bed, but drops out of here and finds some more support down there. But if this pattern holds the way this is kind of showing on some of this internals, and things start to hold, and buying interest continues on the dips, this is the track I'm thinking to where we would go to 42 before 32. Now, of course, if this starts to break down, these are the levels to really watch. If it broke down this level and went further, this is where I'd be a little nervous. If the 61.8% at 32.8 started to break to the downside, and momentum's behind it, I'd be a little nervous there. But at the moment, I'm still liking this area of buying interest to keep this going in this direction. So daily held the bull zone here. Even it dropped down and held this 38.2% level on every test, even though the bulls had control and had momentum during this time. It was never breaking there. So to me, for that not breaking, that was a bullish signal for me. So I kept my longs. I didn't. It would have to get three days settle underneath the 38.2 for me to start unwinding some of my longer term trades that I'm holding, that I've been holding for a long time. But the 38.2 is held here, so I like that this is still looking pretty strong here on the bull zone for the daily. And one thing that I noticed was it's been about a week or so that we haven't seen a day over day ADX increase until just yesterday, when we saw a positive day over day on the ADX. It's hard to see here graphically, but if you pulled up the data, you would see it. And then also it popped up above this line, and then is held right here as support, and the momentum's there. So to me, any dips should find buying interest on the daily, and we should be working our way back up to that 42K level at this point. So unless some of these internals start to change, I'm still going to ride this trend. And then moving on to the weekly, I said last week, if this level held right here, it was a buy for me. So I did. I bought some more. This was definitely helpful. I moved that line. Let me put it back. There we go. The hold here, because this is what I was looking at from back in history. At this point right here is when we had this 38.2% hold. It was when it broke to a further larger correction. It went to the 61.8%. But in this case, it held the 38.2 and held this level, and then is actually inching back up. So this is a pretty nice signal for the weekly. And the bulls still hold control there. And then lastly, the main thing I wanted to kind of show, which is kind of interesting. I've been looking at this monthly chart for a long time, and I always like to try to find little patterns in here and see what's going on. And one of them that I found that is kind of interesting is I took the rate of change from the low up to the trend line here, and take that same rate of change up to this point. And if you take it to that point and move it over, it was the top of the monthly channel, or the monthly candle right there. And if you take that same rate of change again, it went up and hit the top of the monthly candle here also. You know, we sold off a lot, but we definitely hit that as a high. Now, if you take it again, the level comes in at about 54.5. So if we ended up breaking this 42K in this month, this could go all the way up to 54 on this pattern. I'm not saying this is happening, but the way things are kind of working out here, it's just kind of interesting. And then if you take it again, it goes all the way up to 67.3. And now this number is pretty significant to me, and I'll show you here in a minute. But if you take this the fib from all the way down here at the bottom and work your way up to where you're at right here, this is where that key fib comes into play right here, the key shallow fib that held and we moved into the next month. But if you move this up and you keep going up to this next level at 54, now remember 54 and 63, because it's going to be interesting when I show you the next chart. But right now, if this goes up to 54, then 35 becomes that next shallow fib. But then if you come all the way back up to the next level, up to here at 67, then all of a sudden this level here at 40, at the pretty much the previous high, becomes the support level. Now, I'm not saying that's going to go all the way to 67, but based on this pattern, over the next 2 months, if we go into March and April, we could hit a high up in the 60,000 range in April, and then retrace back the next 2 months into June, which gives the June here is the timing of these lows that we had in the market each time. So if the low is going to come in June, it's going to come when we start to see a major correction. And if this thing goes all the way up to this next point, just say it goes to 54 this month, and it just goes crazy for the rest of this month. And then the retracement back to the 38.2 would bring us back down to 35, and a full retracement all the way, not a full retracement, but back to the critical support of 23 is if it goes up to this point and then corrects back into June. That's where so we would go from 54 to 23 possibly, or if it gets really nuts and goes all the way to 54 for this month, and then for the next month it goes all the way up to here, then we can look for it to go into June into 43, or maybe even to 28, which I think would be really cool. And the pattern would work out really well if it went all the way up to 67, and then for the next 2 months it crashed all the way into June and got all the way down into that 28.8 again. That would be absolutely beautiful, because then if that happened, it's just freaking game on for later on. But I mean, this is just all speculation and just it's basically fun with charts. But I just thought this was really interesting on how these levels hit perfectly off the same rate of change from the low to the break of this trend line, from this point up. But just weird stuff. Don't trade off of it. Just interesting. But the 54 and the 67 come into play, because when I look at this is one I talked about last week when we hit this. So hopefully we can break above this midpoint and get us going. And that's when the 54 and the 67 will come into play. I know this chart's going to be a mess, but the main thing here is, I understand it all because there's a lot of lines on here, but I'm going to point out the things that I'm kind of looking at. The Elliott wave part that I've been following is this, look for the circle one and then the circle two. So we had this wave one, and this is the primary trend. And then you had a wave two here that was like a consolidation. And then from this point, we went all the way up to wave three. And then within that wave, we had the ones with the parentheses around it, the 1, 2, 3, 4, 5, like that. And then even inside two to this third wave here, it broke down into a 1, 2, 3, 4, 5 again. So this is a nice extended wave to the upside. And then this wave here was a flat consolidation. And then this wave from 3 to 4 was a quick zigzag down, this ABC right here, and then held at this 30,000 level or so. I mean, it went down into a 28.8 or so, but then it popped back up. I don't know if this is going to be the actual case right here. I mean, we could just go like a big W and just go like this, go back up to the top and then come back down again before we go back up. But right now, the way this thing's kind of holding, if we kind of go as a wave 4 up to a wave 5, and it kind of mimics what we did on wave 1. So we had wave 1 down here, 2, and then 3, and then 4, and then 5. When wave's the longest, and especially when it's extended, wave 1 is generally the same distance as wave 5. So when you look at the way this moved up to wave 1, this wave can push us all the way up to here, which brings us up around the $65,000 range, which matches up really nicely with this fib, which would be the 300% level. So if this moves up to the top of this range right here over the next couple of months, that would be pretty nice. And that would bring us at the basically the end of March, and then maybe into April, May, June, we'll correct back, and then get that low in the June that we saw on the monthly at this point, and maybe we get that low in June where we correct back. Now, if we break down from here, of course, the correction back will be much lower. Maybe we'll get back into the 18,000 for a low in June. But if this is going to keep continuing to the upside for the next couple of months before the correction starts, then we'll just get a higher low on a nice correction. Now, if we do end up getting this all the way up to the 67 and it drops to the 38.2, which would be at 42, that would be a 35% correction from the high. And if it wants to get all jiggy with it and get all the way down to the 61.8% at around 28,000, that'd be a 57% correction off of that. So that's what I'm looking at. I'm not saying that it's going here, but these are the patterns that I'm just kind of continuing to follow. So as long as my levels that I watch on the fibs, and then also the fib zones, if they keep staying intact on each correction back, then there's no reason why this can't keep correcting in shallow. I guess it's not really shallow, but these are 10, 11% little dips back. And if that's going to happen and they continue to hold and keep continuing to the upside, I'm just going to keep riding this trend until it tells me otherwise. So that's what I'm looking at, Saw. So I know I've been running through this pretty quickly. So if there's any questions or comments or anything, throw them out.
I'm not seeing too many questions, definitely a good number of comments. And I think as you have been showing us the same methods week after week to come to the conclusions that you've been coming to, we're starting to make some more sense of it. And at least that's the hope anyways. And that seems to be how it is. It's all making sense to me. The most critical part being that how you use the fibs to determine the trend, and along with the RSI, when the fib levels are continuing to hold on each pullback, you are continuing to stay long and strong. And as soon as those critical levels start to break down, or as soon as the RSI starts to show signs of weakness, you're quick to get out, but you're also very quick to get right back in. And I think that's a very important thing, specifically what you mentioned with the swing trading requiring cutting losses short and holding on as long as the trend is in your favor. And I think that is the most important thing about most forms of trading, and just continuing to be aggressive when you need to be, and then conservative when you need to be. That's going to be the key. So I think that you had a lot there, and anybody that is still kind of trying to wrap their head around what he went over, I just suggest watching it a few different times, watch it in slow motion, take notes, and
slow motion.
Start looking at some charts for yourself to see if you're able to pick out where these critical fibs are and where these thresholds change based on the emotions of the market, and where those critical inflection points are. Where fib starts all of his analysis is where that turning point is in the market, and being able to identify that turning point is the most important part about what he does, as far as I'm concerned.
Yeah, that's where the experience comes in. That's where it took a long time to kind of figure out how it all worked. But I think it's just the coolest thing, because and this is what keeps me all passionate about it, and I keep doing it, is because Fibonacci's are what they are, and everybody's and a lot of people are going to take like the ultimate low and the ultimate high, and they're going to look at it, and that's fine, and you can get a lot of good information off of that, and there's ways of using that information. But the cool thing to me is these fibs are being based off of areas that people aren't going to start their fibs from, and to me, that's where that whole like phenomenon comes into play. That there's patterns in there that people can't see like on the surface. There's something more in depth, and it's just phenomenal to me that it happens. It's just like it's so weird. I don't even know how to explain it. I've been doing this for so long, and it's a phenomenon that I'm still I don't even know how to explain it. I'm just like, it's just in nature. It's in human nature. I don't know. It's just there. And the more I deep dive into more geometry and things like that, it's just amazing to me. It's just phenomenal. It blows my mind, and I'm sure it blows other people's minds too, but it's just, that's what keeps me going. It's finding ways to kind of keep reading these patterns and finding ways to for one, make money, but then and stay sustainable. But then again, just the joy of knowing that there's this kind of thing happening. And believe me, I've been called everything under the sun, from mumbo jumbo to voodoo to tea leaves to who knows what in the hell. But they can go scratch, because until you get in it and really dive down into the rabbit hole, it's just phenomenal. It's just phenomenal. So I'm done. It's just crazy. It just blows my mind. But go ahead. It's all you now, Saw.
Yeah, appreciate it. And I think that it's really comes down to, for me, the collective consciousness of the emotions that I feel at certain times. A lot of other people are feeling that exact same emotion, and the degree to which I feel it is going to be the degree to which I managed risk. If I got into too big of a position and then that liminal space hits, then I'm going to feel those emotions much more intensely, and it's going to cause me to make mistakes. I realize that I'm never going to be able to avoid these emotions that are inherent with speculating, and the only thing I can do is control them through controlling risk. And then when I do that, I can start to pay attention to, ooh, I'm feeling a little scared here. Maybe that's what a lot of other people are feeling, and maybe it's a good time to buy in that case. So I think learning to pay attention to the emotions that you're feeling, and being aware that other people could be feeling those same emotions at that time, and then realizing that it's all going to be a function of position size, and that if you're really trying to get rich quick and change your life with this one trade, because you got big wide eyes and that sort of thing, it's always going to go wrong. And it's not going to be because you feel something somebody else doesn't. It's just going to be because you feel it to a higher degree, or at least that's my opinion.
Yeah, and one thing you said is the word collective. So to me, like where the psychology is in the market is what you're saying, is like there's a lot of people that are probably in that same liminal space at a certain period of time, and then that's when the collective comes together and has that momentum switch. So it's this overall social mood that's going on in the market that, to me, I'm trying to measure and try to figure out when that social mood actually switches and kind of changes the whole sentiment. And then that's where I'm trying to measure where to start the fib going forward, to see what that proportion would be going forward. Because to me, it's all about proportion. It's not about price. I can give a shit about what price is. I'm all about the proportion. So if the proportions are staying the same and that pattern is staying the same, and the collective and everyone in the market is in that same kind of thinking of where the levels would be, not that they know exactly where the price levels are, but it's a collective psychology that comes together. It's something that's really hard to explain, but you nail it when you say collective like that. And that is what I'm actually trying to measure, is the overall social mood and when that actually changes. It's not the easiest thing in the world, but that's what I'm trying to do.
I think that that's really important, because that's the foundation of technical analysis, is that markets move based on emotion, not based on value or anything else that anything that gets moving is going to get overrun and overbought, and anything that gets over selling off is going to get oversold, and that it's a function of emotion opposed to anything else. And therefore, if you're using that as the foundation for how you approach the markets, it's probably going to give you an edge. At least that would be my opinion.
Yeah, and mine too. That's why we're here. Now, let's show us your mumbo jumbo, and let me get my hoodie on. Get ready here.
I'm still not seeing Joe here, so maybe
I haven't seen any messages or anything.
But we'll go ahead and dive into some charts here. Last week we were looking at somewhere around in this move. Let's see, what is today? 4th. Yeah, it's like the 20th. Yeah, right in here. So, and I was pointing to the sky as the spot where I wasn't too worried. I'd mentioned I'd sold at a lower price than what we were currently at. So we're probably up around here. And I had taken some profit on this 50 EMA to wait and see what happened. And this was a spot where I felt like if we were going to continue, that there was going to be plenty of time for that to happen. In terms of, I saw this as needing some consolidation for it to just take off right through the sky. I was kind of talking about, yeah, it might keep going up, but if it does, I think it's going to have to either kind of consolidate up in here below it or have some sort of throwback down into here. So this is where I was paying very close attention to see, do we support the beach /200 EMA on a throwback, or do we just dump right back down and potentially lead to a death cross? That was the main thing I was looking at. And as we did find nice support there at the beach area, I was able to go ahead and buy back. Let me see here. 31,676 after selling 31,977. So basically the same price that I sold at, was able to buy back, and then also kind of layered in, got back in some more at 33,875. So was very much liking what we saw here back in this area. I was worried seeing this descending triangle, seeing lower highs with equal bottoms, and that being bearish, and worried about this being that fake out, that head fake before the breakdown. Very, very common in Bitcoin, where you have a very visible pattern that a lot of people are looking at. There's often going to be some sort of head fake before it actually breaks down. So that what moving averages you have on there again? I forget. Let's see here. I actually got an extra one. 50 is the green, and 200 is right here below the beach area.
Okay, it was the other one you just took away that I was trying to figure out. But okay, I got you. Cool, man.
All right. So yeah, that was really important for me to see that it didn't get a death cross here, and it shot right through, turned it back into support here, and then this was what I was paying close attention to see if this was going to be some sort of trap before a major dump down. And we clearly, got some really nice support here. And once it started eking its way back through here is where I became very interested in buying, because now not only do we have a breakout of the trend line, but a throwback. So that's what, whenever a trend line breaks, I don't consider it broken until there's a throwback. And even right in here, I didn't consider it a supported throwback because, we're still dropping down. But in here, now that we reclaim the 50, after, like this is the area where I would expect it to, have either like one candle that just goes straight down. Like when these moves down happen, they generally happen very quickly. And when you have a move into support, and then it doesn't just quickly move through. Instead, it starts to spend some time consolidating or, just kind of bouncing around, that sort of thing. That's where it starts to look to me like this isn't one of those times where we get the, these big moves that happen with just all red candles back to back for the most part. Here, that's very much looking like it could happen. And then here's where that very much changed, specifically because we start to support this trend line on a throwback along with the 200 EMA. And then once we jump back above the 50, that's kind of the final confirmation for me. So yeah, that's where I was looking to buy, and I did get a trim here filled and 37,140. So I was trimming here again at the sky, 37,140. So yeah, right in here. As we were, we test the beach, then we come back to sky. This is the buy zone. This is the trim zone. And this, when I'm buying here, trimming here, even if I'm convinced that the price is going up, the more certain that I am the price is going to just keep going up, the more I know that it's time to trim, because the times that the price really moves is when I'm really not thinking it's going to do it. That's just my experience. At any time I'm not sticking to my rules, and anytime I'm not trimming in the trim zone, then that's generally when it was going to be the absolute best time to do it. And the best time to do it's going to be when it's difficult to do so. So here's where I'm paying very, very close attention to see, are we going to do kind of what I was looking for here, consolidate below the sky and put ourselves in a strong position to then break through. Let's see if we can find a good example. Oh, geez, Luis. This is a pretty good one here. Notice how the sky rejection generally comes pretty quickly after testing it within a few candles. You get a sharp kind of move down. And then here, notice how you get up to that area, but you just kind of go sideways and consolidate, and that puts it in a good position to break through. When you just pump into the sky like this on, a bunch of back-to-back green candles, that's where I really expect resistance to hold. Whereas when you kind of tiptoe up there and then you call in reinforcements and then they show up, now you're in a good spot to go ahead and kind of break through. So what's going on here? Come on. Oh, I'm scrolling. Come on. What happened? I guess it's just moving a little slow. Oh, geez Louise. Okay. So what in the, are you kidding me? Okay.
Is it like lagging?
Yeah, it's and then it keeps going in and out. Okay, so here we had this kind of, straight run up into the sky. That's where I'm going to be viewing this as a really good selling opportunity. Very same as here. Move up into it, where I don't really expect this to be the time for us to shoot right through. I say that this is the time to sell, and that if it is a good sell, it's probably going to be very clear within a few candles. And if it's not a good time to sell, there's probably gonna be a few days that I have to sit back and wait and see how we react. See if we just continue to support this 58 EMA over the next couple of days. Then that's a lot different than just moving. Let's see here. So this moved, 20% in the matter of a day. So you pump 20% in a day into a big level of resistance. That's not a good position to just, hammer through, in my opinion. What would put it in a good position is to go sideways for a few days after getting that nice rally. That would tell me that we're actually sustaining it and supporting it, opposed to just, something like this. So that's something I pay close attention to, is not where we're at, support or resistance, but how do we get there, and how are we reacting? And so far, this is pretty darn good reaction. These are kind of the candles where I would be looking for a, kind of a sharper move down. And the more that closes that we get up in this area, the more interested I become in this being in a good spot to go ahead and break through. In the meantime, I am very interested in the idea of us developing an ascending triangle leading into a phase 2 retest. This is going to be the number one thing that I'm expecting at this point. Let's see if we can get some good colors on there. Okay, so I'm just going to connect these lows of these wicks this low here from January 4th, this low January 18th, this low January 25th. And then just connecting these highs with this close here on January 4th and this open here on January 11th. When I draw in that, it starts to paint a picture of a very, very bullish pattern after a big move up. So kind of like I was just mentioning, you move 20% up in a day into a big level of resistance. Well, it doesn't put it in a very good position to keep moving through. But if you then sustain that for a while, now we're really talking. So that's kind of what's happening here. We have this huge move up that is, it can't just keep going up and up and up forever, but it also tends to not dip down to where people want to buy. So that's kind of what I'm seeing here is it's kind of failing to dip down into the area that people really want to buy. And it's continuing to hold these prices up in here. So I am very much looking for a retest of this phase 2 trend line. And if we do that here in the next 3 or 4 weeks, I think that we're in a good position to hold it right now, but I think we need time to consolidate to really prove this price is reasonable, opposed to it just being something run up on euphoria or something along those lines. Okay, so that is pretty much everything that I have. I'm going to be very, very much interested in buying this trend line, no matter how it gets there, really. If it's in the next couple of weeks, I've got bids sitting here. And if we come down and test it this week, I'll be buying. And if it takes longer, I'll be buying. And if it never comes into here, then I will know exactly when and where to get fully re-entered. And right now I'm like 30% long or so, a little bit more. So I had sold out around last week, sold out to recoup my entire original cost basis. And I was able to leave about 30% of the original cost basis on the table. And when I bought back in at those prices I was mentioning, it wasn't big. So it put me at like 40, under 50%, something like that, of the total exposure. So I'm feeling like I'm in a really good spot if it does take off, but I'm not really expecting that to happen just yet. So I'm definitely going to be aggressively trimming. And yeah, that's why I'm back down to around 30%, because I entered, got it up to around 50% exposure, and then I trimmed about 80% of that re-entry. So just to make it clear, I entered around 9,000 and took profit, and I took out my entire initial investment and left the remainder in Bitcoin, such that about 30% of my initial investment was a leftover in Bitcoin. And then I rebought about 20% of the full pot, the full piece of the pie. So that 20% that I rebought, I trimmed about 70%. So therefore that leaves me with like 6% remaining on the table of that last entry, plus the 30% that was initially entered. So up to about 36%, give or take. And that puts me in a really good spot because I have very little risk and a very significant amount of exposure. So if it does take off from here, I would not be any happier than anything else happening. But if it doesn't, then I'm going to be in a really good spot to go ahead and re-enter somewhere around this trend line and this trend line. And also the 4-hour beach, which is waiting right here around 33.3. So that is what I am looking at right now. Feel like I'm in a good spot, which you can get yourself in these good spots when the market's moving in your favor, and move in your favor in a significant way if you are prepared and ready to and ready to execute. I mean, we all know how hard it is to finally get on the right side of a market, and when you finally get on the right side of a market, that's when you really got to be ready to execute and make some really good decisions. because if you're just going to sit back and just hope or whatever the case may be, get greedy with the profit or anything along those lines, that's where you're going to realize, like, man, I had this opportunity to take all this profit and I just never did. What the heck was I thinking? And what you're thinking is you didn't have a plan. So it's very, very, very important to have a plan. And if you're in a situation where you didn't have a plan and you're sitting on a profitable position, well, you are in a very, very lucky position. And I would suggest that you shouldn't just sit back and hope that it all works out. If you're in a spot where you've got this position, but you don't really know what the hell to do with it, figure out what to do with it before it goes wrong, because it will go wrong. And if you are waiting for that to make any decisions, then you're going to make the wrong decision. So planning ahead of time, and then having the courage and the wherewithal and the experience and the discipline to stick to that plan in the heat of the moment, just like Fibbo talked about earlier. When things get a little hairy and get scary, he just tells himself, I'm going to stick to the plan. I'm just going to stick to my rules. Sometimes it works, sometimes it doesn't. When it doesn't work, I'm not going to be out on the street homeless. I'm going to be okay. I know how much I'm going to lose, and it's not going to affect my life. If you're making decisions for money that's going to affect your life, you're going to have a bad time.
You're going to end up getting out, and then it goes straight up, and then you're kicking yourself.
Oh, it's the worst.
Yeah, exactly. No, but I mean, you make a good point when you say stick to a plan. The plan doesn't always mean just finding a spot to get into the market. It's also how much risk, and then also have an exit plan, and have like my whole deal on this one was 38.6. I sold at 38.6 when it got there because that was my goal, and I got out. If it would have went to 40,000, so be it. I mean, that happens. I mean, it happens. But in this case, it worked, and came back down. Now I'm back in again, and I have a target on that of basically the previous high, or the previous high of 42. So my goal for the one I just got back in is going to be 42. But then of course, if it hits the 38.2% level on the downside and it breaks into the shallow fib level on the or the bearish levels on the RSI on the 4 hour, then I'm out, and then I'll lose that position. But the good thing is the amount that I made off the move to 38.6 will cover a loss if that ends up happening. But if it doesn't and it goes to 42, then it works. That's the way. You just got to kind of let the plan go. And it's kind of like once you get into the market, you have an entry point, you have a stop point, and you have an objective, and stick to it and do it. When I first started a long time ago, I would get into that realm of, I think that one of the hardest things for me when I first started was trying to figure out when to get out. I've always been in a position, and you see the dollar signs going up and you're just like, this is awesome. I don't want to get out because it feels like it's going to go up more. That emotion is like, it's like killer. So to find a way in your risk tolerance or whatever it is, conservative, aggressive, whatever, and find an exit point that gives a good reason on why you're exiting at that point, and stick to it. Because a lot of times that, someone will get out and it goes up another $1,000 and they're like, damn, it should have stayed in. No, you shouldn't have. You did exactly what you're supposed to do. So it's another thing is like, there's always another opportunity. Like that's another thing is like, that's the way I always kind of look at it. If I'm out of the market and I take profit, or if I take a loss or whatever, I know there's going to be another setup. I know there's going to be another opportunity, and I just got to continue with the plan and sticking to it. Now everybody's plans are going to be different, but once you realize what you're doing and manage that risk like that, then just stick to it. I mean, I know it's easier said than done, but it's just, you just got to stick to it. I mean, I don't know what else to. And we're not all perfect. There's times that I do it too, when everybody does it. Everybody in their. If people say that they don't, they're lying, because there are times I've held on to positions longer than I probably should have, because I started veering away from the plan, thinking it was better than it probably could have been, that kind of stuff. And then those are the ones where it actually kicks my ass. So then I'm like, okay, I should have just stuck to my plan, that kind of thing. So it's a learning experience as you go. That's just the main thing. That's what we talked about at the beginning, right? It's all about getting in and just getting slapped around a few times, and you learn from that mistake of getting slapped around. Okay, what did I do wrong? Oh, I didn't stick to my plan. That's as simple as that. I told myself I was going to get out at this level, and it got to that level, and I didn't. And why did I not? And then try to figure out the reasons why you didn't. And if it was just greed, then you know that you needed to stick to the plan. Or if your model or whatever you're looking at was starting to give weird signals, and then that's why you stayed in. Find out why your model showed those signals, and adapt to it or whatever. So I don't know. I'm just rambling. Sorry.
No, it's all really good stuff. That's something that came to me very naturally due to my history in poker. So it's something that I don't talk about near as much as I should, but it's all about not being results oriented. That is the key, is that everybody in trading crypto is way too results oriented, to the point where it's going to be entirely debilitating, and you're never going to learn anything or ever going to be able to improve if you're too results oriented. So let me give you an example of the forum that I spent all my time on and very much learned a lot from. It was called 2plus2, still around, and a great forum, 2plus2.com. And there's areas where you'd post beats, brags, and variants. So you'd post like a hand, like, look at all this money that I just won. I just won thousands of dollars, and look at how good I am. And nobody would give a shit ever, because one hand doesn't mean anything. You could have just gotten lucky. If I got aces and you get kings and I win $5,000 from you, it doesn't mean anything. It just means that I got aces and you got kings, and you got in exactly where you should have got in, and so did I. So it doesn't mean that you're bad, and it also doesn't mean that I'm good. It's just a sample size of one is completely irrelevant. So therefore, you have to start to dig into, well, what is relevant? And what would be relevant is to show me a hand where you got your ass kicked. Let's see that. Let's see a hand where you lost $5,000, and then explain your thinking and thought process, and show me a hand where you really got hammered, and you would have played it exactly the same, to where you can show me that, yeah, the card just ran out bad. I made a really good read here. I got in a bunch of money where I was a 90% favorite, and then the river hit a 10% time. Yeah, I'm just going to lose there sometimes, and I played it great, and I'm able to recognize that even though I lost money there, I still did the right thing. And that's where you will get yourself so screwed up, is that, oh, I folded 2-4 suited pre-flop, and then on the flop comes all my suit. I would have had a flush, and this other guy flops top set. I would have gotten his whole stack. And that's where you go wrong every single time, is thinking, oh, well, the flop came with all flush cards, and I had those flush cards, but I folded them, so I shouldn't have folded them. And that's where you get yourself in this loop of trying to improve, but never actually improving, because you're looking to the wrong things. You're looking at the variance, at the luck. You're looking at, well, if I would have called here in this one time with my 2-4 suited, I would have flopped a flush and I would have made a bunch of money. Instead of looking at, what if I call here every single time with 2-4 suited? And this is what poker players are incredibly good at, especially nowadays. It's mind-blowing, the calculations that they'll go through to say, okay, if I call 2-4 here suited every time, then I am losing, $5.68. They'll get it down to a point percentage of a penny to know exactly over the long run, based on the odds of how often you're actually going to hit that flush versus how often you do hit the flush and somebody else has a bigger one, or anything along those lines. Actually figuring out over the long run, on average, is this a profitable play or is it not? And then going from there, instead of being wishy-washy, hoping and regretting and all this sort of stuff, just understanding the math, that this is a profitable play mathematically to get an aces pre-flop every time. No matter if I lose 10 times in a row, I just know mathematically this is the play to do. And the more I talk about it in a couple of workshops, as being like the guy at the slot machine. The more times you pull the lever and it comes up a loser, the more likely it is to win that next one. So that's the hardest part about trading, is the more ready you are to quit after a handful of things not going right. That's when it's going to be the worst time to quit or to not stick to your system, because it's after it doesn't pay out a handful of times, that's when it's really in a position to do it in a big way. And the only way that you can take advantage of that is if you're going to be consistently sticking to your process, sticking to your rules, sticking to your routine through thick and through thin, and then also knowing when, okay, I did this play here that seemed like it was right. It was part of my rules, but it just keeps not working out. Each time that I do this thing that's in my rules, it just isn't working out like I think. So now it is time to go back and go to the drawing board and hit the calculator and run the numbers. So you have to have a rule set, and you have to keep track of the results so that you can check to see, is this actually working or is it not? Because if you just trust on your memory, the biases are not going to give you an accurate picture. So keep records, keep results, and stick to an objective system so that when you lose, you can come back to your rules and you can say, okay, did I stick to my rules? Yes. Did I manage risk properly? Yes. And did I lose a reasonable amount? Yes. Okay, that's not even a loss. That's actually a win, because you stuck to everything and you execute everything. That's the win. If you come back and you say, I should have done this, or I should have risked less here, that's the actual loss. And that's where you need to learn from yourself. And if you're consistently executing your rules and consistently managing risk, and it's not turning out how you thought it would in your back test or whatever the case may be, that's when it's time to look at what's going wrong and where can it be improved. So that was
no, that's good. No, that's good.
Absolutely. So yeah, I think we got into some good conversations and chats. I'm glad that we were able to take some side conversations there, as those are, I think, tend to be the most important and get the most value to most people. And yeah, so I will be going ahead and logging off now, and thanking you for your time. Anything else that you wanted to say?
No, I'm all good. I think the show's covered a lot of stuff. So I'm out on Twitter at Fiboswani. So if you guys have any questions or anything, just throw them out and I'll try to answer them.
Beautiful. And we'll look forward to catching up with you guys next time.
All right, later.